Good morning, everyone. On behalf of Committee on Public and Government Financial Management of Institute of Chartered Accountants of India, I welcome you all for today's webinar on 16th Finance Commission, Local Government Perspective. This session will be delivered by Dr. V.N. Alok, Professor of IRTA. And before going further, I would like to give you all a brief overview of the committee's activities. As a partner in nation building, the ICAI through Committee on Public and Government Financial Management is contributing to improve the accounting, financial reporting and financial management system in all tiers of government in India, including local bodies. The committee is involved in sensitizing officials of various tiers of government in India by various means such as organizing workshops, developing relevant e-training modules, etc., submitting technical inputs on various documents of Government Accounting Standards Advisory Board in India and internationally on the documents of International Public Sector Accounting Standards Board, running certificate on public finance and government accounting, formulating accounting standards for local bodies, and providing technical support for certificate courses for accountants of panchayats and municipal bodies. Now, I would like to invite CA Ayush Sahni, who will be moderating today's webinar. He is qualified CA and has empaneled with all the major banks as an auditor. CA Ayush Sahni is an elected member of NIRC and also elected bearer of Confederation of Indian Industries. He has been associated with several professional bodies of Jammu and Kashmir and outside for welfare of business community and entrepreneurship, and has held several positions like chairman, secretary, treasurer, convener, etc. Respected participants, if you have any query, then please post it on chatbot. Now over to you, sir.
Thank you so much for generous introduction. So first of all, thank you to the committee for inviting me to moderate today's session. So I am C. Ayush Sahani. I am elected member of J&K branch of NIRC of the ICAI. So on behalf of ICAI, I welcome you all to the webinar on 16th Finance Commission, Local Government Perspective, organized by the Committee on Public Finance, Public and Government Financial Management. I feel honored to welcome our speaker, Professor V.N. Alok, eminent expert in public finance. So, I would like to start this session by our institute's motto, which is Ya Esh Sukteshu Jagrati, the one who is awake and enlightened when everyone else is sleeping. So, as shared with me by the committee, I would like to share some recent developments of the committee and achievements they have done. The ICI through CP-GFM committee has entered into Memorandum of Understanding MOU with Office of CNAG to collaborate on accounting and auditing issues and to strengthen the accountability mechanism for good governance in local self-government. In pursuance of MOU, certificate course for accountants of panchayat and municipal bodies have been launched. The eligibility criteria to enroll for such courses is 18 plus and 12 pass in any stream. The students can register through for this online course through a dedicated website, the link of which can be easily found in a committee's website or even ICI's website. The committee has collaborated with Ministry of Housing and Urban Affairs to transform the quality of financial reporting for ULBs in India. To begin with, draft framework is being laid out for quality assessment of audited and unaudited annual accounts of ULPs being uploaded on City Finance. Apart from this, the committee has also recently organized trainings in vernacular language, that is in Hindi, Gujarati, Marathi, Tamil, as well as in English for various government departments from time to time. So without much ado, I would now like to introduce our eminent speaker today, Professor V.N. Alok ji. He has been teaching public finance since 1999 in Indian Institute of Public Administration, New Delhi. He has been member of Delhi Finance Commission and contributed to almost all successive union and state finance commissions since 1995 in different capacities. He conceptualized the devolution index by ranking states and constructed it annually during 2009 to 15. On the basis, Prime Minister awarded the top ranked states every year on the National Panchayat Day celebrated on the 24th of April. He has led and conducted many research studies funded by the constitutional bodies, union and state governments in India, multilateral organization in range of public policy issues. Dr. Alok has written a number of books and articles to reputed journals and economic dailies on spheres of public finance and policies. Sir, we are delighted to have you as our speaker today. So it would be great to listen to you as an student of finance and student of public policy. We will get to know a lot from your insight on this topic today. Over to you, sir.
Thank you, Mr. Ayush, for a very, very warm introduction. And thanks to the committee of the ICI for having invited me in this particular webinar. This webinar is on the 16 finance commissions and the local government's perspective. I particularly do not prefer to call it local body because this term is nowhere in the constitution or any of the state acts. It's a government, it's an elected government. And whenever we refer to local government, we refer to panchayats and municipalities. It's good to know that the CNAG has signed a memorandum of understanding with the ICI just a few months ago, and ICI is involved in the accounting mechanisms of the local government. You started with the municipalities first, which I think you did it about 20 years ago as well. And then at the later stage, you will be doing it with the ministry, with panchayats. So I do believe that you will also be talking to the Ministry of Panchayati Raj for the panchayat accounts and subsequent audit thereafter. So the subject which is here today, and I'll be having a presentation on this, but before that, a brief introduction to the subject, that the 16 finance commissions headed by Professor Arvind Pangadia, who was the vice chairman of Niti Aayog just a few years ago, and a professor in Columbia University, a very eminent economist. He is the chairman of the commissions and a very eminent civil servant who has been working in the Ministry of Finance, and he was also a member of the 15 finance commissions and the secretary of the 14th finance commission, Mr. Ajay Narayan Jha. He's also a member there. And then a lady member, she's there. She was there in the Department of Expenditure. And one vacancy is there. So anytime the commissions can be a full commission, but commission started working as of now. And I've met all the members and chairmen in my personal capacity. And they are very excited to work on local governments. This time, the terms of reference of the 16 finance commissions is the verbatim reproduction of the constitutional provisions that is there in Article 280. Okay. In 15 finance commission, there was, I think, about 4-page, that longish TOR for the 15 finance commissions. And I was told by the finance secretary that the 15 finance commission could not address 4 of them completely. They ignored 4 TOR that was given to them by the President of India. So my presentations in this will be, first of all, be talking about the concept of the intergovernmental fiscal transfers, because the 15 finance commissions will be making transfers from the union government taxes to the states and local government. And initially, I'll just be talking about the concept of this fiscal federalisms, how fiscal federalism is required, and then I'll move to the Indian case. And within Indian case, I'll just move to the local government finances and what are their problems, why finances are required in this. So I do have few slides, Sanuj, and any point of time, if anybody has to have any, raise any questions, they can sort of do that. Okay. So my first slide always, with respect to intergovernmental transfers, first is definitions of what federal system is all about. So the federal system, as you can see from the slide, is a method by which the power is divided between in Indian case, is a union government and the state governments. So that within the sphere, they remain independent, at the same time they coordinate with each other. So there can't be a complete autonomy and complete cooperations. If it's 100% cooperations, then it's going to be a unitary country like UK or France. And if it is complete independence, then it's a separate country altogether. Okay. So it can't be 100% autonomy or 100% cooperation. It would be a fine blend of both. Now, the Indian federal system is very different with that of the United States of America, as has been mentioned by various state government people. They are comparing it with, and particularly the former finance minister of Tamil Nadu, who has the habit of comparing Indian federal system with that of US. In US, many units came together, they formed the federation. There the power of the states are, it's much more than the power of the state that we have in India. Indian federalism is devolving. Okay. It is not coming together federalism like United States of America. It's devolving the power, because India was one country. And we created these states. The Indian Union created these states. And we do not use the word federation in our constitution. We use the word union of states, which means a state can come in, but cannot really go out. Okay. Whereas in the United States of America or in Canada or in Australia, many other places, one can come in and one can go out. Okay. So that's a basic difference between the Indian federal system and the American federal systems. One can see the huge differences from one state to another. For example, there in US, the California, it's considered to be a state where there is it's complete freedom has been given to the residents of the California state, whereas in Georgia, there are lots of acts which prohibit people to move freely from one place to another. Okay, or exercise their own power. Now, coming to fiscal federalisms, whenever we have a federal system, whether if it is US or it is India or it's Germany or in Brazil or Argentina, each level of government have been assigned certain responsibilities. Okay. Typically, the defense service that has been assigned to the national government, services like primary education, health, okay, that is always assigned to the subnational government of the state government. The printing currency, okay, and creating highways or expressways, these are all the responsibilities of the union government or the federal government. That imports and exports, again, the federal government. So far as the sanitations, solid waste management, issuance of birth certificate, death certificate, all these powers have been assigned to state government. Now, it's a different case than if we have Local government, that's the third tier of government, is what we call a multi-order federalism. In that multi-order federalism, we have more than two orders of government. So that's a different case. The state government assign these responsibilities to the local government, like sanitations, potable drinking water, primary educations, or public health and other things. So we assigned responsibilities, we also assigned revenue raising powers. What all has happened, the way or the kind of tax instrument that have been assigned to various orders of governments, either they are either these instruments are not good enough to finance the kind of responsibility that have been assigned to you, or the revenue that you generate are more than the responsibility that have been assigned to you. Typically, in all federations, the federal government collect more revenues, spend less. State government, they spend more and collect less. So there is a vertical imbalance. And this vertical imbalance is here in India, this vertical imbalance is there in Canada, it is there in the Australia. In India is more pronounced because more taxing powers have been assigned to federal government, that is the union government. Union government collects personal income tax, corporate income tax, and central GST and the import duties. Okay. Whereas the state government collect only the state GSTs and state excise. There are other taxes. So union government collect in India about 65% of the revenue. State government collects about 35% of the revenues. Okay. And so where the responsibilities are concerned, state government is responsible for 65 and union government for 35%. So we need to transfer the revenues. And that's a four pillars comes, that is intergovernmental fiscal transfers. Now, how part of intergovernmental fiscal transfer comes? How do we transfer this? So there are various models across the countries. For example, in Brazil, the Senate decides how to transfer the revenues. In various countries, one ministry decides how to transfer the revenues. Like in Canada, the Ministry of Finance decides, and they have various committees and others. So this is how they do it. In some other places, there are officials, they meet periodically and they decide what kind of transfer mechanisms will take place. In few other federations, for example, in Australia or in South Africa and in India, we do have institutions like finance commissions. Australia, the institution is called the Commonwealth Grant Commission, which was started in 1933 when Western Australia, they threatened to secede. So they said, we don't believe the way you transfer the revenue, so we would like to be a separate country. So in the negotiation, it was decided that there should be an institution like Commonwealth Grant Commissions. And in that commission, all professionals will be members and they will decide. They will not be political people, they will decide. And the membership could be from the federal government, state government, and local governments. Okay. So from the 1933 experience, in India, we created 1935 Act, and the Indian constitutions is have taken a lot from the 1935 Act and also taken the provisions of the finance commissions from the 1935 Act. So we do have finance commissions here. So these four pillars of fiscal federalism, and I'll come to the case about the finance commissions here. Now, typically, in most countries, federal government have been assigned these responsibilities, as I mentioned: defense, currency, external affairs, external trade, major infrastructures, and regional government have been assigned the responsibilities of public order, primary and secondary educations, public health, electricity, municipal affairs. Some powers are concurrent in nature. Like in India, we have a 7th schedule in the constitution: union list, state list, and concurrent list. The residual powers are with the union government. So the 4th list, which is invisible, that goes to the union government. In many places, there is no clear-cut pattern so far as the minerals resources are concerned, or the criminal law is concerned, or agriculture is concerned. So I'm talking about the international orders. When we assign responsibilities, we also assign tax handles. And from this slide, you can see that certain taxes in most countries have been assigned to various orders of government. Here, U means union, S means state, and L means local. When we assign taxes or non-taxes, there are various parts of taxes and non-taxes. Who will decide the base of the tax? Which means who all will be the assessees. Okay, this is a group of chartered accountants. You understand more than I about the assessment procedures and others. Then which level of government decide the rate? Whether rates is ad valorem or specific duty, that's again depends upon which level of government decides rate. These two aspects of tax policy is extremely important because that is the sovereign powers of the government. Then comes which level of government actually collect the tax and appropriate the tax. Now, there are two things, whether you collect and appropriate the tax. Okay, sometimes you collect the taxes under the tax rental arrangements and you have no powers to appropriate that revenue. So various aspects of taxes. So income tax, it has a redistributions. It has to be redistributed among the states in the federal systems. So it is generally collected by the federal government or the union government. Okay. Now someone is talking about wealth tax these days, which have been abolished. So that also has a redistributive effect. Okay. So I'm not getting into that kind of debate that 1% people are contributing the maximum. So we have to introduce wealth tax and other things. As a recent paper from Harvard University, it has been circulated all around. Value added tax, single stage sales tax, harmonized. So all these things, there is a literature available. And if someone is interested, they can read Richard Musgrave on who tax where and what. So there, the tax assignment and the responsibilities assignment that has been given to them. So what are the issues there? Own source revenue. If you collect taxes from your own sources, you can decide how can you spend the tax. Okay. So that decide the autonomy of each level of government. And generally, as I said, revenue raising capacity of the federal government is higher than the expenditure needs. And so far as the subnational government is concerned, the revenue raising capacity of the state government is lower than the expenditure needs. So we have to transfer the revenue from the federal government to the state government. Now that's a vertical transfer. Since all the states are not the same, some states are big, some states are small, some states have desert areas, some state depends upon agriculture, some state depends upon service sectors, the manufacturing. So all the regions are not the same. Okay, you have fiscal disability factors. So your needs are more. So the intergovernmental fiscal transfer mechanisms has to take care of all these parameters. So these transfers Some of them are conditional, some of them are unconditional. These are the goals of fiscal transfers. First of all, to correct fiscal imbalance. If we are collecting less, spending more, so that kind of gap has to be filled by the transfer mechanisms. Then bridging the horizontal fiscal imbalance. The per capita income of one state is more than the this is few times more than the per capita income of some other states. Like in India, the per capita income of Goa is about 9 times that of Bihar and other things. Okay. So that one has to see that part of it. Then setting national minimum standard. What does it mean? It means that it's one country, though it's a federal form of government, but it's one country. Whether you stay in the state of Mizoram or you stay in the state of Himachal Pradesh, but you are entitled to primary education. So if the state government is not being able to provide you the quality primary education, there will be interventions from the national government side to see that every citizens of the country get that kind of service. And through transfer mechanisms, you also influence the local priorities. As you can see, the Swachh Bharat Abhiyan or a couple of other initiatives of the national government. Through transfer mechanisms, you also take care of the infrastructure deficiencies. Infrastructure does not really mean physical infrastructure. It involves the social infrastructure as well as the institutional infrastructure. Social infrastructure, I mean primary education and health, and institutional infrastructure, I mean the law and order situations. Now, coming to the case here in India, the Federal Assembly of India, it comprises a union government. Then we have 28 states. These 28 states includes some of the special category states. These special category states are northeastern states and the hilly states. That is Uttarakhand or Himachal Pradesh. Jammu and Kashmir has now been converted into a union territory. So these special category states, they get special fiscal dispensations from the union government. So far the schemes are concerned, the contribution is less than the contribution made by the general category states. Then comes the union territories, 8 of them. And out of these 8 union territories, 3 of them are with legislature. And you all know about NCT of Delhi is a union territory with legislature. So the Lieutenant Governor is there. And all sensitive matters, the powers are there with the union government. And these sensitive matters include law and order, that is police, and land issues. So the union territory of Delhi is very different because here the municipal corporation of Delhi it was there forever, and the NCT government of NCT of Delhi came later. Just about 30 years ago that was formed. So it's a very different case that the government of Delhi is taking powers from the MCD. Then down the line, what we'll be talking about in this is rural local governments is 272,000 panchayats. We call panchayats at 3 rungs, that is at the district level, block level, and the village level. So 272,000 panchayats and about 3.2 million 32 lakh हमारे elected representatives. Okay. So 32 lakhs elected representatives and 272,000 panchayats. So we do have so many governments in the country, which is you can't really see anywhere else in the world. So that is the kind of democracy that we have. So every time we have elections, and you know about a committee report which says that all the elections be together. This involves the elections of the local governments as well. So we can have one general elections, assembly elections. These two elections are conducted by the Election Commission of India. The elections of the local government is conducted by the state election commissions. So one has to devise the mechanisms by which these two bodies can also talk to each other. So that is there. Now down the line, urban local government. The constitution call it municipalities. That is that it draws its power from part 9A of the constitution, and this is municipalities. It's about 5,000 odd municipalities, and there are three levels: municipal corporations for big cities, municipalities for not so big cities, and Nagar Panchayat for the area which is being transformed from the rural to urban. Now, Constitution does not define what municipal corporations, municipalities, and other panchayats. That is a central act. The definition of municipal corporations, municipalities, and other panchayats are there in the conformity acts. And most municipal act, it says that the size, that's a population size in the area, that these are the two factors which decide the formations of municipal corporations, municipalities, and panchayats. Now, as you can see from the slides, there's a taxes that have been divided between the union and the states. Most buoyant taxes of revenues are with the union government, and not so buoyant tax of revenues are there with the state government, as I said earlier. From this slide, you can see the map of the country. The size of Uttar Pradesh is about 300 times of the population is concerned of that of Sikkim. The per capita income of Goa is about 9 times that of Bihar and Jharkhand. Many of the southern states, they have advantage of so far international trade is concerned. The northern states are landlocked. So many of the states, they rely on agriculture. So their rate of growth is low. Some other states, they rely on the tertiary sectors. So their rate of growth is high. There's another factor that is the capital. The credit deposit ratio of the scheduled commercial banks in some states, for example, Himachal, Uttar Pradesh, Haryana, and others, is just about 40%. So the amount of money that the residents of that area, they deposit with scheduled commercial banks, they do not really get the credit. So 40% goes to the bank. And in few states, for example, Tamil Nadu, if the credit deposit ratio is more than 100%, there is a capital flight from the few northern state to southern state. Why I'm saying so? Because there's some kind of a narratives that have been built. And for example, the chief minister of Karnataka was going to the prime minister or coming to New Delhi, or the chief minister of Kerala was coming to New Delhi and saying the way the intergovernmental fiscal transfers that are taking place, southern states are at disadvantage. So these are the narratives that are being built, but the finance commissions, it takes many parameters into considerations, and then they make the transfer mechanisms. There is another point that Bombay or some other or place like Bangalore, where the headquarters of many of the businesses are there. So because of those headquarters, they are contributing to the maximum to the tax kitties of the income tax or some other excise. So there are various parameters like this because of the labor that is being exported from Bihar or from Odisha or from Uttar Pradesh. The economic developments takes place in many other states. So there are views on this. Okay. Now coming to institutions. So these are the institutions which transfer the revenues, finance commission, and we are talking about finance commission. Niti Aayog is not an institution which transfer the revenues from union to states. Interstate council is for the interstate disputes, and Team India, we headed by prime ministers. The meetings take place. Some of them. Okay. And then the state finance commissions, and that is between the state and local government, the kind of money that has been transferred to them. Okay. Now coming to the finance commissions. So the President of India, under Article 280 of the Constitutions, it constitutes a finance commissions with the chairman and 4 other members. So the commission distribute proceeds of the union taxes between union states. So, mind you, it is the finance commission will decide how much of the revenue that the union government collects will be retained by the union government. Union government collects revenue on behalf of the President of India, but they do not have the right to appropriate that revenue unless or until it is being passed by the parliament. Okay. And finance commissions suggest mechanisms or recommend how much of the revenue of the taxes collected by the union government can be retained by the union government. So you distribute the revenue between union states, and then which state should get what? That is a horizontal distribution. They also make that. What happened even after transfer the taxes to some states, state still had the revenue deficit. Okay. Revenue deficit, it's different from fiscal deficit. Your day-to-day income and day-to-day expenditure. So that is the kind of revenue deficit they have. And even after transferring the revenues to the states, state still have fiscal deficit. So there is another instrument called grants in aid under Article 275 of the Constitutions. Finance commissions recommend revenue deficit grants. 15 finance commissions recommended revenue deficit grants for about 16 states. Okay. So that is another window. One window is the devolution of taxes to the states. Another window is the revenue deficit grants that goes to the states. Okay, so that there is no revenue deficit. The third window is the transfer to the states for panchayat and municipalities. This is the constitutional provisions under Article 283 B, B, and C. This subclause B, B, and C was inserted in Article 280 because of the 73rd and 74th constitutional amendment in 1993. You all know there was a constitutional amendment, and because of that, Part 9 and 9A was inserted in the Constitution. Part 9 is about the panchayat, and Part 9A is about municipalities. Okay. So, and in both these parts, there are number of provisions, number of articles there for panchayat and municipalities. Okay. So the 15th Finance Commission, which was constituted in 2017, it submitted its report in November 2020, and the kind of recommendation that they made, Parliament accepted that, and the funds flow mechanisms is taking place on the basis of the 15th Finance Commission's recommendations. So 15th Finance Commission said that 41% we transfer to the states out of the total taxes that have been collected by the union government. Union government collect taxes, and divisible pool is how you define a divisible pool is the net taxes. Net taxes means that cost of collections that has been deducted out of this. What was there before the 10th Finance Commissions? Before 10th Finance Commissions, only the personal income tax and central excise duty, these two taxes were shared with the states. 10th Finance Commissions observed that the union government was collecting more and more those revenues which were not shared with the states, that is, the corporate income tax and the custom duties. So 10th Finance Commission said, that was headed by K.C. Pant, that let all the taxes be pulled together and an X percentage of that we share with the states. Because of that, 80th Amendment to the Constitution took place. And in that 80th Amendment to the Constitution, the union government made one change, one very big change, that instead of having gross revenue, which was suggested by the 10th Finance Commission, they said it's going to be a net revenue. So the difference between net and gross is the cost of collection outside. But that's the small point. The bigger point was that the cess and surcharges will be kept outside the divisible pool. Thereafter, union government relied more and more on cess and surcharges. So though 15th Finance Commission said 41% of the net revenue we transfer to the states, if we include net the cess and surcharges in the divisible pool, then it is just about 32% that transfer to the states. So many states have been crying that why can't the cess and surcharges also be shared the way all other taxes are shared with the states. So this is one part of the 15th Finance Commission's recommendation that 41% will be shared with the states, and this on the criteria was income distance method, tax effort, all sort of things. Okay. Basically, finance commissions transfer the revenues out of equity considerations. Finance commissions is a Robin Hood, take money from rich and give it to poor, and equity considerations are prime considerations. But there are pressures that you also have to consider efficiency. That these states which are making efforts to collect more and more revenues and observing fiscal prudence, they should be incentivized. So the finance commission's formula is a blend of equity and efficiency considerations. So that is the devolution part. And then I said there is another window through which you transfer the revenue. That is a grants in it. So first is the revenue deficit grant, and second is the grants to the local government, both panchayat and municipalities under Article 283 B, B, and C. And then third is the disaster management grants. Because we do have a Disaster Management Act 2005, and in case of any disaster, whether it's a man-made disaster or it is a natural disaster, we have just faced a disaster in the past, that is a pandemic. So we have to have certain contingency provisions for that disaster. Finance commissions make that. So as you can see from the slides, 11, 12, 13, 14, 15, they identified few parameters and they have assigned these kind of weights to each parameters, and the money was transferred to the states on this. So the area of contentions is generally about these parameters. Okay. Some states says that why are you considering income as a main, as a central point in far as transfer is concerned? Why not population? The population, then some states say that we are managing our populations. Why are you giving so much of weight to populations, and why are you taking 71 population figures and taking 2011 populations figures, all sort of things that comes in. So this is what the 16 finance commissions constituted, headed by Professor Anil Pangadia, as I said earlier. So they will also be fulfilling his mandate as far as Article 280 is concerned. Okay. Now, this is about the 16 finance commissions, and this particular subclause which is there in Article 280, which was inserted after 73rd, 74th, that Union Finance Commissions or the 16th Finance Commission has to suggest measures needed to augment the state finances. Why you need to augment the state finances? Because there is a state finance commission in the states, and the state finance commission is making some recommendations. And because of those recommendations, the money is transferred from the state to the local government, both panchayat and municipalities. And that has created a stress on state finances. So it is the duty or the part of the Union Finance Commissions to take care of that stress. Okay. But what all has happened, the reports of the state finance commissions for the relevant period, that is going to be from 2026 to 2030, should be available. They are actually not available with the Union Finance Commissions. So the Union Finance Commissions for the last about 5 Union Finance Commissions, they made the recommendations based on certain kind of trends, not based on the recommendations made by the State Finance Commission. So we'll come back to this, and this is a very complicated sort of a TOR before the Finance Commissions. So What kind of local government we do have? We have a local government which has been created through a national constitution. So all constitutional bodies had to take care of that. The local government that has been created uh, should be in comfort zone, not under stress all the time. And state constitutions, in fact, few federations, they have more than one constitution. For example, Germany, US, Australia, and Argentina. So they have two constitutions. So that's local government created two state constitutions. And central government legislations, provincial legislations, Canada and other places, and executive orders. Though China is not a federal country, it's a unitary country, but the functions are very much federal in nature. So the local government created in China very, very strong, though created through an executive order. But short point is, if the local government created in federations through our national constitution, it is the responsibilities of all constitutional bodies to take care of their needs. So key questions generally come: what type of functions should the panchayat and municipalities carry out? And if these functions have been given to them, how you arrange the necessary funding for this? This is what Article 243G of the Constitution, and through Article 243G, 11th schedule was inserted in the Constitution, and it enumerates 29 matters. These 29 matters are there, and the Constitution says that both the union and the state government, they have to design some verticals, and on those, panchayats have some say. Either they identify beneficiaries or they implement these schemes themselves. I have listed them under 4 categories and said 4 functions, like maintenance of community assets, provision of drinking water, building culverts, bridges, ferries, and other things, and provision of health and sanitations, and primary health centers and dispensaries. These are the primary responsibility that must be assigned to panchayats. If they build up the capacity, more and more functions can be assigned to them. So likewise, 12th schedule was also created under Part 9A of the Constitution, and this 12th schedule is it enumerates 18 matters, and these matters again be the responsibility of municipalities, whether municipal corporations or municipal councils or nagar panchayats. Okay. These are the sources of local government finances. They collect some revenues from their own sources. Typically, municipal corporations, they are able to collect about 50% of their total expenditure requirements. If you exclude municipal corporations, then all other local government, whether you take municipal councils, nagar panchayat, district panchayat, block panchayat, or gram panchayat, they collect just about 10% of their total expenditure requirements, which means 90% of their needs, it comes from either state government or the national governments. Okay. So all source revenues, they have to strengthen. How to strengthen them, that one can talk about. Then borrowings. Many people say that municipalities and panchayat, they can't borrow from the market, but we do have acts, some of the acts which was created during British period that is still applicable. So the 1914 Act is the Local Authorities Loan Act, Central Act, and many states enacted conformity acts. It is these provisions are there in Municipalities Act of many of the state government and Panchayat Acts. That's a different case that no panchayats have borrowed so far in the country. And many municipal corporations, they have issued bonds, Ahmedabad, Bangalore, Hyderabad, and others. And under the smart cities provisions, the union government had been encouraging the municipalities that you borrow from the market. SEBI is also supporting them. Third point comes the verticals that have been created by the union government and actually the state government as well. I've not mentioned that state as of now. So these schemes are on various sectors. Livelihood could be on primary education, could be on primary health center, various uh, areas these schemes are created. And both panchayat and municipalities have some say in that. That comes the devolution and grants from the State Finance Commission and Union Finance Commission that we will see subsequently. So if we take the own source revenue, typically property tax, somewhere it is called building tax, somewhere it is called house tax. So these property tax is the mainstay of the local government taxes. How to strengthen property tax? There are various methods, unit area methods, couple of methods. So this has undergone certain kind of reforms. This reform took place in Delhi, the reform took place in many other places. Then tax on professions. Profession tax means if this tax is very strong, then maybe a chartered accountant professions, okay, that can be taxed at a very high rate. It could be on medical doctors, it could be on architect, it could be on lawyers. But the constitution has decided the limit up to 2,500 per annum. It's fairly low. Many successive finance commissions have been recommending that we have to go for constitutional amendment and this limit be enhanced. But no change has taken place so far. So 2,500 per annum is very, very low. Then there are a couple of other taxes. This is just an indicative list of this. And then the service charges. The services the local government provide for water and sanitation. So service charges are there. As I said, for borrowings, Loan Authorities Act 1914, and it exists, enable the local government to get money from the market. And the Venkatacharya commissions, they have also recommended that the local government must borrow from the market. I cannot really see if you have any questions as of now. Okay. So the state finance commissions, as you can see, the way it was drafted, it was not really a masterpiece of legal drafting. As you can read from the slide, as good as I can see, I can read it. what all has happened that because the word at the expiration of every 5th year, you constitute the finance commissions. Many states, what they do, they wait for the expiry of the 5th year and then they wait for a long period to constitute the state finance commissions. So we do not really see a very regular constitution of the SFC in many of the states. Now that's point number one. Point number two, even if you submit the report, there is no pressure on the state government to consider the recommendation and place the report in the House of the Assembly, because the related article of the Constitution is silent on that. It's silent on the time frame. Okay. So this is the problem. Then the sub clause in Article 280, on which this particular webinar is on, it says that on the basis of the recommendation of the state finance commissions, that should not be there. Why? Because it's very unlikely that successive finance commissions, the union finance commissions, will be able to get all the reports of the state finance commission for the relevant period, before they make their own recommendations. So these are the flaws in the legal drafting. Then problem with the SFC, even if you constitute the SFC or the state finance commissions, they are not regular. That's point number one. And then their terms of reference, it varies across states. The state government write anything under the sun for the state finance commissions. Then the way the local government have been empowered in the states, it varies across states. So the degree of decentralization is huge variation across states. The way state finance commissions they approach is just not uniform across states. Somewhere it is positive, somewhere it is normative, somewhere it is a mix of both. So many approaches are there. And how do they calculate the vertical fiscal gap is not known, because there is no formula in those reports. The way the SFC compose or the constituted is not akin to the constitution provisions for the Union Finance Commissions. Union Finance Commission, Article 280, you say that person with qualifications. So there is a Finance Commission Act. In that Finance Commission Act, the qualification of each member has been prescribed. Who can be a chairman, who can be a member, and okay. So there has to be one person from the public finance background, one person from the law background, not below the level of the High Court judge in the states. So those things have been prescribed in the Finance Commission Act. But a similar act for the state finance commissions, one cannot really find in many states. So that is an issue. And there is an absence of time frame. How you consider the recommendations of SFC, that is also not there. So, and there is a realization at the top level. The Prime Minister said in 2004 about the recommendations of the SFC, as you can read from this slide. The third point comes, there are some schemes. So these are some of the schemes of the union government in which panchayats have some say. And these schemes are on various subjects, midday meal, employment, health, land records, many things. ICDS. Likewise, they do have schemes for municipalities as well. So I'll just be having about 3-4 slides, and then if there are any questions, we can take that up. Now, this particular slide. Why I'm showing you this slide? Because many union finance commissions, they have been saying that they may or may not transfer the revenue to panchayat and municipalities because constitution is very is the constitution provisions quite confusing. They say it says you suggest measures. Suggest measure does not really mean financial transfers. Yeah. And we have heard that even one or two chairmen of the commission has been saying in public that they were not obliged to make any transfers to both panchayat and municipalities. So I'm getting into the genesis of this particular constitution provisions. And genesis one can see in the Joint Parliamentary Committee report. The Joint Committee of the Parliament, which drafted the 73rd and 74th Constitution Amendment, if you read that report, one can find that they said that apart from augmenting internal resources, methods need to be devised for enlarging the area of assured devolutions and quantum of assistance that will flow from the center to states and from states to local governments. So if you read the genesis, if you read the Joint Committee report, it is very, very clear that they were suggesting fiscal transfers from the union government to the states for local governments. So far as Union Finance Commission is concerned, they have been transferring revenue to both panchayat and municipalities, starting from the 10th commissions to the 15 finance commissions. And from 10th to 14, what they did, they increased the quantum of fiscal transfers 3 times from the previous commissions. Let's say 11,000 said 8,000 crores, 12 commissions said 20,000 crores, and 13 commissions said 63,000 crores. And the 14 said 63 into 3 is about 200. So 2 lakhs crores. Now what 15 did from 2 lakhs crore to just 2,36,000 crores. So in fact, instead of any kind of increase, they have decreased the fiscal transfers in real terms. In real terms means if you take into consideration the inflation part of it and the populations, certainly the fiscal transfer suggested by the 15 commissions is lower than the transfer made by the 14th commission. Okay. So we can expect from the 16 finance commissions that they suggest at least 10 lakhs crores of rupees for panchayats and another about 3 lakhs crores of rupees for municipalities. And this is what the allocations, the way they transfer the revenues. What criteria do they consider? Population and area, finally by the 14th and the 15th Commission. Prior to that, they considered various other parameters as well. So these are the few, these are my last two slides, and then perhaps we can take questions. That both panchayat and municipality, they do have roles in many central schemes. Since they have roles, assets are being transferred to local governments. If you transfer the assets, then you also transfer the revenues. Otherwise, they will not be able to take care of the assets. How you spend that money, which area, what type of service, standardization of service, there must be some kind of benchmarking. That's point number 3. Point number 4, that money is transferred to both panchayat and municipality through several windows. And they have many bank accounts. Why can't we reduce these windows and make it a one big window? Okay. That's point number 4. And how do we strengthen the fiscal information system so that we get the data, what type of expenditures are taking place, how they're getting their revenues, whether the residents of that area are getting the services or not. So all sort of information must be there in this. How to make the State Finance Commission central? Because as of now, it's just a peripheral institutions. The state government are not very serious in constituting the commissions and not very serious in considering their recommendations. How allocations we made become predictable and consistent, whether it's a Union Finance Commission or the State Finance Commission. The money that goes to them must be on time. In the state budget, there is a head called head number 3604. And in that, the panchayat component and municipalities component must be very, very clear. And whatever money that is flowing to them should be clear under that head. Okay, and this fiscal transfer should be through devolution routes. Then we can amend Article 266. Article 266 talks about the consolidated fund of the Government of India and the consolidated fund of the state government. Consolidated fund of the Government of India is net of the state transfers. Similarly, the consolidated fund of the state can be net of transfer to the panchayat and municipalities. So that change can take place, and we identify the status of the local government the way it has been mentioned in the constitution. How to support states to strengthen fiscal capacity of panchayat and municipalities? So not so much a problem of municipal corporations, but it is a problem of panchayats. So they have to have their own offices, panchayat ghars, essential staff, and operational maintenance costs be met by them. And there must be some training provisions for both elected representatives as well as the officers there. And equalize the local public goods in the local services. So interventions must take place for essential services like sanitation, potable drinking water, primary education, primary healthcare centers. And how to develop indicators so that the upper level of government can monitor them. And this is what my last slide. Okay. The role of the Government of India and the state government, the the role of the union government, the government of India, is to influence the 16 finance commissions so that they transfer or they recommend to transfer more and more revenue to both panchayat and municipalities. And the fiscal needs of panchayats and municipalities are quite high, that need to be estimated. And similar fashion, fiscal capacities will increase. Okay, so that's what my last slide. If we have any questions, we can take that up. Thank you, Mr. Ayush. The floor is yours.
Thank you so much, sir, for this insightful session. We had so much learning and we gained so much from this session. So if anybody has any query, they can write in the chat box.
I don't think any questions are there because I did not really see anything on the chat box, which is very rare. Whenever we had interactions with the
Yes,
ICI,
yes. Actually, sir, this module we are having is in this we are having only panelists. All the members are joined via different module with us. So that
okay,
is why a bit kind the restriction is there. But still, in chat box, if I guess if anybody is having any technical glitch or anything, they can just write in chat box. Chat box you have to write for all in meeting group chat.
maybe we can allow them to speak if they want to speak. I can stop sharing the screen. Maybe they can do that if
Yes,
someone wanted to speak.
if anybody has any query, they can just raise their hand or they can just
Any
unmute them.
comments? Any comments, query, whatever.
Yes.
Comments, observations, any such things.
Sir, we have received few questions from the participants.
You have received?
Yeah, yes, sir. So we'll read those questions one by one, sir.
Sure.
Yes, sir.
I have also received on WhatsApp certain queries. So first of all, ma'am, you can go ahead with the queries. If they are same, I'll not ask them. So otherwise, I'll ask afterwards. You asking the questions. So
Yes,
please
sir.
go ahead with yours.
Yes, sir. Sir, has the commission made any specific recommendations regarding the development of social sectors?
Okay. Social sectors, right? Any, what are the other questions?
Are any new strategies being proposed in the 16th Finance Commission to ensure transparency and accountability in utilizing funds allocated to local governments?
Okay. Any other
Should I
question?
read? Yes, sir. To what extent does 16th Finance Commission empower local governments and promote decentralization?
Okay. Right. Fourth.
Just a minute, sir. How did the recommendations of the 16th Finance Commission contribute to the overall development and capacity building of local governments in India?
How to? Okay.
Should I read the next one, sir?
Right.
ULBs are uploading their accounts on City Finance portal and on their own website, but RLBs and panchayats are not uploading their complete accounts. Only union government funding details are being uploaded by them on eGram Swaraj. Whether panchayats are being considered compliant to 15th Finance Commission?
Okay. That's a good question. Yes. Right. Any other?
Yes, sir.
Tell me.
Just a minute, sir. In many states, still State Finance Commission has not been constituted, but Chapter 7 of 15th Finance Commission has mandated for State Finance Commission constitution, otherwise no funding will be released. Is it being implemented in reality?
Very good question. Okay. Okay. Now, question number one. Now, that is about a specific recommendation for the social sectors by the Union Finance Commissions till 15 Finance Commissions. I just wanted to say that 16th Finance Commission has just been constituted. So they will be making recommendation. They have not made any recommendation, just been constituted. So they will be considering it as our responsibility to tell them what are the perspectives, various perspectives. Okay. Now, question is about, have they made any recommendations for social sectors improvement? Question is, answer is yes. 12 finance commissions recommended that some money be allocated for water supply schemes, because at that time there was a Sojal Dara schemes, and the Sojal Dara schemes, through the 12th Finance Commission's money, that Sojal Dara schemes was strengthened. So O&M component of the Sojal Dara schemes was taken care of by the 12th Finance Commission's money. Okay. So similarly, they also made the recommendations for the solid waste management schemes for the municipalities. Okay. Similarly, 13th Finance Commissions and 14th Finance Commission, they have been arguing that this money be utilized for social sector, for various services, not for salaries and other things. So they have been saying so, but whether this money was utilized for that sector or not, that was not really known for us. So that is the role of the auditors that comes into it. And this is actually the opportunities for chartered accountant to support the CNAG or the AG office in the state government. Okay. So that's about question number one. Now, question number 2 and 3 is again about 16th Finance Commission, whether they have made anything for this, whether they have made anything for that. So as I said earlier, 16th Finance Commission have just been constituted, and their report will come in October 2025. Okay, October 2025. If they get any extension, the report will come in December 2025. That would be submitted to the union government, and the union government will place this report in the House of Parliament only in January 31st or 30th, 2026. So before 2026 January, we will not be able to see what 16 finance commissions, will be making the kind of recommendations. Okay. Then the fourth question is how the 16 finance commissions will be making any kind of recommendations for the local government. My whole presentation was all about that 16 finance commissions is mandated to transfer revenues to local government under Article 283 BB and C. So it is the responsibility, the primary responsibility of the Union Finance Commission, including the 16 finance commissions, to recommend resource transfers from the union taxes to the states. That's point number one. Point number two, transfer revenues to both panchayat and municipalities from the union taxes. So these are the constitutional provisions, and the 16th Finance Commission has to make that kind of recommendations. The third was the fifth comment was the ULBs on city finances. What was that? Can you repeat that question?
So which one?
The fifth question, the union, the urban local bodies on city finances.
Urban local bodies are uploading their accounts on City
Okay,
Finance
okay.
portal.
Okay. You are saying so, right, very right. So that's right. They are doing it. See, problem is, as I said in my presentations, the capacity of panchayat in many places very, very low. I have seen panchayat in Uttarakhand. One panchayat secretary is managing 17 panchayats, which is not the case of a big municipal corporations. Nagar Nigam, Nagar Palike, there's a different names from that, from one state to another one can see. So they are doing that job. Okay. They are doing the job, but that's the Ministry of Panchayati Raj, they have created this e-Gram Swaraj, but there is certain amount of reluctance on the part of panchayat and some certain amount of reluctance on the part of the state government to upload that kind of an account. This system has just been created, and this will take some time to get matured. And we have seen a recent report from the Reserve Bank of India. They have taken care of, they have taken the data from the e-Gram Swaraj and published that report. So it's become very, very critical. And there were many criticism of that report. Okay. So this e-Gram Swaraj is improving. It is not the best system in the world as of now, but this is keep on improving. Okay, just being created. Now, the 7 questions is about the time frame of the state finance commissions. Now, before I respond to this question, there are certain questions on the chat box. Hi, my question to Alok sir is, in Delhi, why we need election in municipal corporation, and the state government should have control in its functions. My reason is election and different political party leads waste of money and conflict of work efficiency. What criteria did the 16th Finance Commission use to determine? I think I mentioned that 16th Finance Commission has to submit its own report. Okay. Is there any audit requirement for central schemes for monitoring and use of funds? That you can see from the portals of these schemes, Mr. Okay, some questions I have received. Have state government have a say in central funding of schemes? Generally, no. My answer here is no. Okay. And then recent UFCs have been increasing the quantum of conditional grants to local government. While the incentives is laudable, many local government end up losing the grants due to not being able to satisfy the conditions. That is the case. That has happened to 13 finance commissions as well as the 14 finance commissions. Your conditions were so stringent. Is accounting standard you will be mandatory? Okay. What are the key priorities and the objectives of the 16th Finance Commission is expected to address this upcoming report? Okay, I just very interesting 2 points I would like to take here. First is that 15 finance commissions have created a conditions that by March 31st, okay, in fact, today is the last day, March 31st, because tomorrow is a holiday, day after the holiday, 31st is a holiday. So I know many state government, what they did, including Karnataka, they have constituted a commissions only just about 4 months ago and said you submit your report by February 2024. Why? Because 15 commissions said that by 31st of March, you have to have a SSC report for the, and that should be accepted also. So the question is, what is the status? Whether the state complied to this or not. My answer to this is no. States perhaps are not aware and they are not very active to respond to the 15 finance commissions recommendations, these conditional grants. I think the union government has to extend this period, because as of now we have elections, after elections, because this is not a priority area for most government. Government has many other priority areas. So this mechanisms, I don't think this is very low on their priority, as I can see from these kind of developments. Now, there was a question there on the chat box. Why do we have election for MCD? Why can't the Delhi government control that? First of all, there has to be an elections of the MCD. It is a local governments and municipalities. So under 74th constitutional amendment say that every 5th year you have to have elections. So that's point number one. Point number two, that MCD is such a big municipal body. It is actually the size of the state government. Okay. Without elections, how can the MCD be functioning? I don't know. Okay. So if the state government control MCD, which means there is no local solutions for local problems, wards will not be working. But MCD systems was older than the Delhi government, functioning. And there were some committees constituted. In fact, I was there in one of the committee which recommended there should be 11 MCDs, not 3. The Delhi government at that point of time, they ignored our recommendations and created 3 municipal bodies out of 1, and it didn't function. Okay, because it didn't function. One of the municipal body, that is South Delhi MCD, it was collecting more and more revenue. The East Delhi municipal body was running short of funds, and at one point of time they were not being able to pay the salaries of their employees, and I know it for sure. Okay, so there are issues in Delhi. Delhi issues actually are quite complicated, and that need to be addressed by a very, very high power committees. As of now, the chief minister is a loggerhead with the lieutenant governor, the union government, and all sort of things are happening. I don't want to comment on that. So it requires a huge political and all kinds of efforts to correct the governance systems of Delhi. Now, municipalities in Delhi are not covered by CFC recommendations, being union territory. Is it fair? That is correct. The union government, that's the reason 16th Finance Commission, they've been saying that you distinguish between union territory with legislature and union territory, other union territories. Okay, so that is very, very true. They get their money from the Ministry of Home Affairs. Okay, why the grants in aid to ULBs are released subject to fulfillment of condition? Is there any constitutional provisions for the same? Constitutional provisions asking Union Finance Commission to make some recommendations, and the recommendation that they're making can be both conditional as well as unconditional. Okay. The Constitution never says that you make conditional or conditionals. It is for the commissions to decide. Okay? So one can argue that the conditional transfer that you make, that remain unutilized because those conditions are never fulfilled. Okay. Okay. Any other questions? Any other question? Green energy field opportunities for CAs and other things. I think this is outside the purview of my my presentation here. But if you can write an email to me, I'll certainly respond to those questions. My email ID is vnalok@gmail.com. You said, what are the key priorities and objective of the 16 finance commissions? I said the 16 finance commissions, their terms of reference are the verbatim reproduction of the constitutional provisions. So no priorities have been mentioned in the TOR. Okay. So it is the Finance Commission to decide its own priorities, and their priorities will be reflected in its report, and that report will only be available in January 2026. Okay. Before that, nobody will come to know what are their priorities. And I don't think even the chairman of the 16th Finance Commission can say anything what are our priority as of now, without having any consultation with anybody. Okay. Can you hear me? Yes, you can hear me. So, madam, any other questions?
No, sir.
Okay.
So I guess, ma'am, is there is any other question we can have it? So what all questions I also received, I just message them into the chat box.
Right.
So thank you so much, sir, for taking time out of your busy schedule and imparting this absolutely wonderful session on 16th Finance Commission. So we look forward to having you again as our panelist, as a speaker for the committee. Thank you so much.
Thank you. Thank you, CI San. Thank you very much. I enjoyed it.
I would also like to thank all the panelists, members, and government officials for joining this webinar. Have a good day.
Thank you. Over.
Sorry.
Thank you.